Hello guys, I'm back again with another video. Sorry I've not been around much lately, but I've just been really busy with other things. I've been helping other members of the website with their trading, and I've also been in the process of moving house, and I've been doing other things that have been keeping me busy, but hopefully I'll get back into it now. I'm also trying out this new screen capture software as well, so hopefully this video turns out alright. There's just a couple of opportunities I want to discuss today, and also I've had a lot of questions from members about trading during the summer months. So basically in the summer, as if we have a look now, you'll see during the summer it's a very quiet time, so there's not much volatility, and that's what we need when we're trading. So we need price to move. Basically it tends to do a lot of ranging in the summer months because a lot of the banks have, bankers and big traders have gone away, and things have closed down for the summer, and people are on holiday and things like that, shut down for the summer. So here's a good example here. We're on the 4-hour chart, Aussie yen. You can see all this ranging that's going off here. Did move a bit back here, but then there's quite a bit of range in here, so it's more difficult to trade in the summer months. So what we do in the summer months, what I do is I just drop down a time frame, and we have to lower our expectations, because in a general situation when I trade the H4 4-hour time frame. Sometimes I look at the daily as well for my levels, and basically I'm looking at between a 30 and 40 pip stop loss, and looking to get somewhere in the region of a 3 to 1 risk to reward ratio. So basically what I do is I'm looking for like 100 to 150 pip profit for each trade, so that I can keep that 3 to 1 risk to reward. So 3 times 40 is 120, so in that ballpark. So what we have to do to trade in the summer is just drop down the time frame. So if I could trade this range here on the 4-hour. I could have put an entry order there. As you can see, it started ranging here. We came down there, bounced off this level here that I've marked with a blue line, and then we bounced up to the upside, and we could have traded it back down. Now on the 4-hour it doesn't look that big a move, but basically if we drop down to the 1-hour, you'll see that this range looks more in keeping in what we sort of look for. So basically we could trade the bottom here, although we've got that line there. Could probably just move that down slightly to the top of that. I always go to the top of the wick. Some people go to the bodies. Some traders mark the level at the body, but it's actually a zone. But I usually stick to the top of the wick, one line. I don't put 2 lines on and have one at the body and one at the top of the wick. I just have one line on. So basically put my line on there, and we can see we broke that, we came back to that, and then we sort of bounced on what we call the zone, and we could have put an entry order above there and traded that to the upside to this level here. And the same again coming down, we could have put an entry order there. See, we had that bearish engulfing candle there. Could have traded that to the downside. Would have been aiming for this, but it didn't go quite all the way down, but would have still made some good profit there. And what we'd do is because we're trading in the 1-hour, we'd want to shorten our stop loss. So basically I'd probably look at a 20 to 30 pip stop loss on the 1-hour, as opposed to 30 to 50 pip on the 4-hour. But we have to lower our expectations, because the market's not as volatile and we don't get very big moves, so we can't start looking for 120 pips at a time when it's not really moving much. So basically if we've got a 20 pip stop loss, we want to be looking at about 50-60 pips profit and then get out. And you can see here, look, we could have put a stop loss up there at the top of that wick, got in here, and that would have been, if we look on the edge here, I get another line. So we could have entered there. Would have entered anywhere on the break of any of them candles there. I don't have any hard and fast rule as to which one I break. As long as I break one of these, we've got quite a few indecision candles there, some dojis. Then we've got that bullish candle there, and I'd have took the break on any of these. If I'd have seen that doji there, I'd have had an entry there. If I'd have missed that, I'd have had entry on this doji or this doji, any one of these. So let's say we waited and we got in there, and then the stop loss would have been 83. The entry is 83.56, and the stop loss would have been at 83.69. So you can see that's a 13 pip stop loss on the 1 hour, and would have probably stayed in there, and it came back there. We probably wouldn't have moved a stop loss there yet, so we'd probably got out on this. I'd have said we'd probably get out on this bullish candle here, because after that happened there, and then it started making a bullish candle, we wouldn't have probably trusted it any more than that. So we'd have probably made, let's have a look, 83.56 to down to 83.35. So 13 pip stop loss would have only made 21 pips, but would have been stopped out. That would have been, it wouldn't have been a loser. Would have just been stopped out at 21. So that's much better than, it's always better than nothing. So it would have been 13 pip stop loss. We'd have still got nearly a 2 to 1, 21, which doesn't sound a lot, but in summer months we have to take account for these smaller moves. And don't forget that didn't go right down to where we wanted it to anyway. So once again we came back up then after that, and would have probably got in again here. Again, another small stop loss. Let's have a look at this stop loss. 83.46. Stop loss should have still been above there. 83.68, so that's about 22 pips stop loss, and then would have probably got out on that bullish candle there. So would have made about 15 on that. But we have to just sort of scalp in the summer months with these small trades. And then if we'd have had the nerve to stay in here through this, we might not have got out here. If we hadn't have moved a stop loss down, we might not have got out here. And if we'd have stayed in through this, bit nerve-wracking, but if you can stay in through that, we'd have got all the profit down to this level. And now you can see we made a big pin bar there at the bottom. We could have got in there, traded this range. We've got to start trading these ranges, you see, in the summer months, and then we'd have got in there. Stop loss would have had to been down here. So as you can see, that's 82.84, 83.10 entry. So again, not that big stop loss. 26 pip stop loss. It looks really big there, but it's only a 1 hour chart. So 26 pip stop loss, and would have made from 83.10 up to this level, which is at the moment it's 83.51. So 40 pips would have made there. So 26 pip stop loss, 40 pip profit, and it's not finished yet. Now, if we were in this, we'd definitely move a stop loss up to the bottom of this, because we've got an indecision candle there, and we're getting close to this level here. So we'd probably move this. I'd move my stop loss probably to that point, 83.50 area, and then we'll see if it. Well, maybe not 83.50 because it's 83.52 now, but probably 83.40. I'd move it to. Give it a chance. You give it a chance, because eventually it will break through this level. So we give it a chance, and we could make more. But this is how we've got to trade in these summer months. We're not going to get really big, 200 pip moves very often. unless it's a news driven trade. So let me just go back to the 4 hour, and that's that. See, you could still trade it on the 4 hour, but you just can't see, you know, the entries are going to be bigger. And see that, look, we've got the really big doji there. That's nearly the full trade on the 1 hour. So I mean, we could still trade this. You could still put your entry there on the 4 hour, trade in this range, and then because this moved quite swiftly up, we got that big bullish candle there. But dropping down to the 1 hour, it just lets us get a better entry and exit. You know, we can see more of what's going on. So I'll just have a look at these. There's only a couple of trades that I've wanted to look at. This one looks like it might break this level. So I mean, if we could wait for a close above that, I'd prefer a close above this level here, and then obviously we shoot for that level. But again, the stop loss there is going to be quite, well, nearly as big as the potential target. So, but we have got that bullish engulfing there. I mean, you could take the trade right now, but we've got to bear in mind that we're at this level here, so we're sort of in between. We're in between a bit there, and also we're just Tenkan-sen and Kijun-sen are close together as well. They need to get further apart. And we've got a bit of thickness on the cloud, so it's a possibility, but I don't think I'd take that one. Bit risky. This one does look better. As you can see, we've trended quite nicely here from there. We're breaking bull fractals. Broke you know, been breaking bull fractals here. We pulled back. We did make a lower fractal there, a lower bull fractal. Then we pulled back and we ranged for a while, and now we've just broke this fractal and we've just pulled back to it. So we could. This does present a nice opportunity. We could put an entry order there, and then have a stop loss below here. So it gives us a nice stop loss, 112.69. That's about a 21 pip stop loss, and obviously a first target would be up there, which would give us about 25 pips for first target, and then obviously we want to be trying to get through, but as soon as we get through there, we could move the stop loss to just under that fractal, and again give it a chance to, because it looks like it's trending back here, so I can't see any reason why it shouldn't carry on, really, as long as there's no news affecting the trade. I don't see a lot going on here. We broke a bear fractal there, and we've got a bear fractal there. Who knows what could happen here? It might pull back to this level here. I'll mark it. It might pull back and give us an entry here to the downside. We'll be getting the crossover soon as well on the Kumo, and we've got a bearish TK cross there, and then there's a bit of space between them, so that's not too bad. Aussie yen, it's just ranging, it's doing nothing. We've got to get past this point or this point. No trade there unless we can get some sort of doji in this area. We could trade it back to the downside, because it's in the range again, you see, because of the summer. This one's all over the place, big range, all over the place, in between trades. You don't know what it's doing. It's gone up there, but you know, it could bounce here, and it looks like it's getting rejected there, and could go back to the downside. I don't like that one at all. Euro Aussie, another range. See all these ranges because of the summer months. We could, if we need to wait for some price action here. It is quite a wider range than that USD yen that we looked at. So if we get some price action on this level here, so I'll move my levels. I check the charts every 4 hours, by the way. I put my levels on, mark my levels, check the charts every 4 hours, and see if there's any opportunities. See what the candles offer, because you know we're coming down here. If we get some sort of indecision at the bottom here, then we can put an entry order and try and trade it back up to the upside. which is a nice, bigger range. And it's honouring these levels as well. This level here, it's honoured this level quite a few times. If we look back, always look to your left. We've got a level there, so nearly, not quite, but nearly there. So 3 or 4 times, and we'll be looking for some sort of price action at this level down here. Okay, so Euro CAD, sloppy range. It's not even a neat range. It's all over the place. You can see it's making bull fractals, higher, lower, higher, lower. Same with bear fractal. It's all over the place. Don't like it. Big rejection there. Leave it alone. Euro pound. Euro pound. We did break. We was in another range. See this range, down, up, down, back up again. Just broke that level. Would wait for that to pull back to this level, give us a doji and trade it to the upside. The Ichimoku cloud is pointing quite fiercely to the upside, so that's a good sign. We've got some nice upside to the Tenkan Sen, and Kijun Sen is just flattened out. But hopefully, if we get some movement like Kijun Sen into the upside, then. But obviously, we want the price action first, and we want some price action down here, a doji or a bullish engulfing, something like that, and then we can trade it to the upside once we've pulled back. Aussie CAD, nothing. It's just all over the place, doing nothing. Not even worth trading in the range. Not even worth dropping down to the 1 hour for that one, because it's just, again, it's all over the place. All we have to do is look at these fractal signals. Okay, USD CAD. Again, it's all over the place. I don't know what it's going to do. It's just too dangerous. It can go either way. So basically, we want to trade levels. So that's about it for that. Just quickly run through that. Just thought I'd bring you another video, because I've not done a video for quite a while. I'm not sure how loud the sound will be on this this new screen capture software, because it's sort of a bit of an experiment, this recording. So hopefully you'll be able to hear it alright and see it alright. If you want to learn more, you can visit my website, tradingtoprofit.com, and I'm going to try and keep putting videos on there, and I'll keep doing free videos, and hopefully this helps somebody. Okay, so until next time, guys, I'll see you soon.